Hello everybody, welcome to today's fundamentals. Hello Peter.
Hello.
What's up in the FX market?
Well, we had the US dollar, which tended to continue to weaken practically. And I would be noting here that we had some comments by New York Fed President Williams, where he stated practically that the Fed still has some way to go before pausing its rate hiking path. However, that did not add something new, so practically allowed for the US dollar weakening to be maintained.
And did gold benefit from USD's weakening?
Actually, it did. However, we see that there may be some tendencies for stabilization today. So that's a little bit in the limbo. I would expect overall, though, the negative correlation between the USD and gold to be maintained. And should we see the US dollar weakening further, we may see gold's price being able to rise.
And how about the US stock markets?
US stock markets were up.
Uh-huh.
All three major indexes. We're talking about NASDAQ, S&P 500, Dow Jones. We're going to be also releasing our equities report, the weekly equities report today. So we have more details in there. Overall, though, we expect the positive sentiment of the market to continue to push US stock markets higher. However, that's all under the assumption that we see another slowdown of the US CPI rates.
And it wasn't also from New Zealand RBNZ's interest rate decision due out today?
Yeah, in the Asian session, RBNZ remained on hold, as was widely expected at 5.5%. Nothing much there, but I would be noting here that practically the bank paused its rate hiking path. I would be noting that we may be seeing also an end of the hiking cycle. Nevertheless, the bank in its meeting minutes or the accompanying statement practically stated that the commit is confident that the interest rates remain at rather restrictive levels, and that may push demand down. Thus, also inflationary pressures are expected to decline. So I would be perceiving this that more or less the bank thinks that it has done what it has to do and may be keeping the rates at high levels for a prolonged period. For the time being, I would expect the bank to remain on hold.
And are oil prices still on the rise?
Oil prices are still on the rise. I would be noting that the conflicting fundamentals between the supply and the demand side are still pushing oil prices higher, especially yesterday. And we had issues such as the OPEC production cuts, which were extended, but also worries about the demand outlook, especially from China. And should there be an increase or expectations for an increase of the demand outlook from China, that could intensify the bullish movement of oil prices.
And what else is in today's calendar?
Well, I would be highlighting practically 4 releases. Definitely the first one would be the US CPI rates for June. Now, the US CPI rates for June are expected to slow down, maybe with the exception of the month-on-month rate on a headline level. Overall, should the CPI rates slow down, that would imply further easing of inflationary pressures. And that may enhance the market's expectations practically for the Fed's aggressive hawkish stance to ease as well. And thus, such a release, should the actual rates meet their respective forecasts or even be lower, we may see the US dollar weakening. Should, on the other hand, though, the CPI rates fail to slow down, we may see the US dollar asymmetrically gaining. The second issue I would be highlighting would be BOC's interest rate decision from Canada. The bank is expected to hike rates by 25 basis points. I would be highlighting here that the market seems to be expecting another rate hike, possibly in the October or December meeting near the end of the year. Should the bank actually hike rates and maintain a hawkish tone in its accompanying statement, implying that the bank remains vigilant and is ready for more rate hikes if needed, that could provide some support for the Canadian dollar. Otherwise, should, say, for example, the bank fail to deliver a rate hike or even deliver a rate hike, but the accompanying statement shows that it's more inclined towards stopping or pausing its rate hiking path, that could weaken the Canadian dollar. Mind you that on the one hand, we have in Canada an employment market which remains pretty tight. So that's a reason which more or less pushes the bank for another rate hike. Also, inflationary pressures are still high. Definitely the CPI rates are above the bank's target. Another reason for the bank to hike rates. On the flip side, though, we see that the CPI rates are slowing down. And they slowed down considerably in May, which may cause some hesitation for the bank to hike because it may want to see how the cumulative monetary policy tightening over the past months has affected the financial markets and whether that's going to be enough to actually allow inflationary pressures to slow down even further. For the time being, we expect the bank to hike rates. Should there be also an accompanying statement which will have a hawkish tone in it, we expect the CAD to get some support. The third issue, that would be more interest for oil traders. We had yesterday the release of the AP weekly crude oil inventories figure. Now, there was a reversal, and practically oil inventories were on the rise last week. So that tended to imply a slack in the US oil market, given that demand levels were not able to reach production. Should that slack in the US oil market be reaffirmed also by today's EIA weekly crude oil inventories, we may see oil bulls hesitating somewhat. And last but not least, during tomorrow's Asian session, we're getting China's trade data. Mind you that currently China's economic recovery is in doubt, or at least it's quite slow. I would be highlighting the trade balance figure, and should the trade surplus shrink even further, that would be spelling trouble for the Chinese economic recovery. Also, Aussie traders may keep a close eye over the import growth rate. Another contraction of the import growth rate would imply practically even less Australian exports of raw materials towards the Chinese giant.
And how about the monetary front?
Well, we have a number of speakers. I would make a start with Richmond Fed President Barkin. Usually, Mr. Barkin tends to lean more on the hawkish side, so should we see that tendency being repeated today again, we may see the USD getting some support. A big question mark is Minneapolis Fed President Neil Kashkari, whether he's going to continue to be hawkish. And I would be quite interested to see how he sees inflation behaving in the next couple of months. I would be also noting from ECB board member Lane, and I would expect Lane actually to defend any further rate hikes, which may provide some support for the euro. And I would also be noting from back in the US, Atlanta Fed President Bostic, which tended to lean more on the dovish side and sees the end of the Fed's rate hiking cycle nearing, while Cleveland Fed President Mester is more hawkish.
Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Welcome to the technical analysis part of the presentation for today. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. Mind you that all charts to be presented are to be of the same time frame. Now, the first thing to note here is definitely the continuance of US dollars weakening as the US dollar index drops, aiming for the 100.60. Let's extend a little bit the downward trend line. And we can see that it remains intact, so we tend to maintain our bearish outlook as well. Small word of warning here, or caution. Note how the RSI indicator is still below the reading of 30, which on the one hand definitely highlights the bearish tendencies for the US dollar. On the other hand, though, tends to highlight also the possibility that the pair may have reached, the index may have reached oversold levels and may be ripe for a correction higher. Should that be the case, we expect the price action to rise and break the pre-mentioned downward trend line. Should it stabilize and maintain a sideways motion, I would expect it to be confined between the 101.60 resistance line and the 100.60 support line. On the other hand, should the bulls take over, we may see the price action rising, breaking the downward trend line, but also breaking the 101.60 and start aiming for the 202.55. For the time being, we tend to maintain our bias for a bearish outlook to be maintained, possibly with the price action of the US dollar index dropping, breaking the S1 at 100.60, with the next possible stop for the bears being set at the S2 99.80. Let's have a look at Euro USD, which should be a reverse picture, and it is. Sorry. Definitely the 1.1010 has to be reversed into a support line, given that it has been clearly broken. That's one. The upward trend line, as we had mentioned yesterday, will have to be shifted to the right, and it's being put to the test once again right now. But nevertheless, there's still a number of higher troughs and higher peaks supporting the idea of a bullish movement. Let's go hunting for a new ultimate resistance level. Highlighting this peak here. Worked as a support line as well. Maybe here as well. Nice. With a red color. At 1.1275. This is an area of resistance here. And finally, there are 3, which is being placed at 1.1275. Let's talk direction. Definitely the fact that the price action is still above the upward trend line tends to allow us to maintain our upward bias, our bullish bias. And that's also being supported by the RSI indicator, which has corrected lower than the reading of $70 before, but it's still pretty high. So Should the bulls maintain control, I would expect the price action to rise with the next possible stop being set at 1.1090. Yet please note that practically the price action's ascent seems to be finding more and more resistance. It's characteristic how the differentials between the consecutive peaks are narrowing down. So practically we may see the pair starting to stabilize, in which case I would expect the price action to break clearly the upward trend line guiding it and remain possibly just above the S1 1.1010. On the other hand, for a bearish outlook, I would require the pair to drop, break the pre-mentioned upward trend line, break the S1 1.1010, and also break the S2 1.0945, nothing less. Okay, let's have a look at cable and super boost pound. Here it is. The late Asian session cable was able to clearly break above the R1 1.2940. However, that no longer seems to be the case as the pair has corrected lower. There was a strong bullish sentiment there. For the time being, though, I tend to maintain our bias for the upward motion to be maintained. I have to note here that Boyce's research tended to highlight that the upward trend line should be shifted to the right. It's an idea which could be enforced, yes. However, that would practically allow for a substantial narrowing of the play field for the bulls. Should the upward trend line be clearly broken, that would force us to switch our bullish outlook and start considering the possibility of a continuance of the sideways motion, possibly below the 1.2940 resistance line. On the other hand, should the bulls maintain control, I would expect the price action to rise, break the 1.2940, and start aiming for the 1.3040. Furthermore, should the bears take over, I would expect the price action to drop, clearly break the pre-mentioned upward trend line, but also break below the S1 1.2850 and start approaching for the 1.2775. Moving now to USD/JPY. Let's zoom a little bit in. That's it. Shifting the downward trend line a little bit to the right. Let's reposition the labels as well. And actually, we're going to be turning this into a resistance line, given that the price action has broken below it. And let's go hunting for a new ultimate support line. I think it's clear that we have some support line here, given that there was consecutive tests of that level, but it held its ground. And that would be green, the 135.70. Let's reposition everything again. Starting with the R3, which is being now set at 143.85. The R2 at 142.10. The R1 at 140.25. The S1 at 138.45. The S2 at 137.45. And the S3 at 135.70. Once again, we tend to maintain our bearish outlook for the pair. And I would be highlighting here definitely the fact that the downward trend line remains intact, even the intensified version of it. And also highlight how the RSI indicator remains clearly below the reading of 30. Once again, this may also serve as a warning for a possible correction higher. However, such a correction would be treated for the time being just as such, as a mere correction. Should the bears actually maintain control as we expect, I wouldn't be surprised to see the price action dropping, breaking the S138.45 and start aiming for the S237.45. At this point, I would be highlighting JPY's sensitivity also to US yields, thus in turn also to the US CPI rates, which are due to be released today during the American session, the early American session. A possible slowdown, considerable slowdown of the US CPI rates would be most probably favoring also the JPY, thus causing USD JPY to weaken or to drop, if you prefer, even further. The S138.45, it's understandable, it's the first test given also that we had through here. Some research have also mentioned that it could go a little bit higher. That's also a possibility. Let's not forget we're talking always about areas and not strict levels. Should the S1 be broken, then I set the 137.45, the S2 100 pips lower, as the next possible target for the bears. On the other hand, should the pair stabilize, I would expect the price action to break the downward trend line, but remain below the R1 140.25, and a possible rise and break of the R1, and the pair starts to aim for the R2 142.10. Could be perceived, in my opinion, that would be a clear bullish sign and time for a trend reversal. Let's move to USD-CHF. Also here we have a clear downward movement. Okay, definitely this has been broken into a resistance line. Let's go hunting for a new ultimate support line. We will have to go back to 2015. Let's drill into the daily chart. Actually, the last time we saw such price action was back in 2020, but nothing much lower than that. Okay, this is the daily chart. Definitely this is a little bit out of a league. Placing it in green. The 0.8590. Adjusting. Narrowing. Back to the forward chart. There you go. And we're placing the S2 at 0.8680. Let's place some labels as well. Starting with the R3 at 0.9005. Red. Let's verify this. Correct. Let's place also the second resistance line. that cannot be correct. Let's verify it. Yeah, it's the 0.8910. Next level would be the R1. At 0.8710. Verify this before moving on. 8820 actually. And the R1, the S1, is now being placed at 0.8755. The S2, which is being placed at 0.8680. And the S3, give me a sec, at 0.8580. 90. That's it. We've placed practically the new support and resistance lines. We have also placed the relative labels. We have a clear downward trend line guiding the pair. There's no question about that. I would be highlighting though some slight stabilization here. And that may be coming into effect here. For the time being though, given that we have an RSI indicator which remains below the reading of 30 despite correcting a little bit higher, implying a rather bearish or clear-cut bearish I wouldn't say outlook, but still sentiment in the market for the pair. Yet at the same time, the possibility of a correction higher is in the cards and should not be underestimated here. For the time being, though, we expect that there may be a correction higher, but still the outlook remains bearish, which means that the pair is expected to drop possibly below the S1 0.8755 and start aiming for 0.8680. Mind you that we're talking about levels not seen since at least 2020. However, if you go further back and actually seek price action at the S2 level, you may have to go back to 2015, 8 years low. On the other hand, should there be a stabilization, I would expect the downward trend line to be broken and the price action to remain between the R1 and the S1, while a possible bullish outlook, albeit most probably will be not occurring, but it's still a possibility and should be covered. We may see the price action rising, breaking the downward trend line, the second downward trend line breaking the R1, 0.8820, and start aiming for 0.8910, nothing less. Let's have a look also at USD CAD. USD CAD, which seems to be finding some support at the 1.3205. Definitely this has to be corrected and be placed as a resistance line. Let's place also some labels. At 1.3465, red. Next one to be placed at 1.3385. Next resistance line to be placed on 1.3275. First support line being placed at 1.3205. That should be in green. Definitely the BOC interest rate decision is going to be, in my opinion, the main determinant behind USD CAD's movement. However, I would be also highlighting the release of the US CPI rates for June, which are also quite important for the pair at one. We're placing the S2 at 1.3175 or 35. And the final support line being placed at 1.3065. That should sum it up. For the time being, we tend to maintain a bearish outlook for USD CAD. However, once again, everything's going to be depending on the interest rate decision to be released by BOC and the US CPI rates. For the time being, note how the downward trend line is guiding the pair lower. So we may expect for the time being that the bearish sentiment, which is being building up, according to the RSI indicator, could push the price action lower, breaking this 1.3205 and start aiming for the 1.3135. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Hello, my name is Christina, and today I will talk about GDP. Gross domestic product is the monetary value of all goods and services produced in a nation during a given time period, usually a year. Basically, it's a record of everything bought for money during the course of 1 year. Consumer purchases from a chocolate to a car and counted in the GDP. When businesses buy computers or export goods overseas, the transactions all increase the GDP. Government spending also contributes to the GDP. A related statistic is the GDP growth, which is a percentage that shows how fast the economy is growing. If the annual rate of GDP growth is 3%, that means the economy is 3% larger than it was the previous year. The rate of GDP growth changes depending on the health of the economy. During an economic downturn, the economy contracts and GDP declines. For example, the recession that lasted from 2007 to 2009 was a severe period of economic decline. A GDP figure that shows strong economic growth means that businesses are making money and can hire people. Unemployed people are more likely to find a job and consumer spending rises, leading to more profit for businesses and even more hiring. Government leaders analyze GDP reports when creating economic policy. The US Central Bank, the Federal Reserve, uses the GDP report to gauge economic activity. Investors look for signs of sustainable economic growth in the GDP report, paying close attention to the information it contains, especially corporate profits. Business leaders analyze the economy's performance as is reflected in the GDP report so they can decide on future investment and production. As a measure of the sheer size of the economy, the GDP provides economists and ordinary citizens alike with a convenient and accurate measure of economic vitality or the lack of it. Thank you for watching.
Today's webinar, we're going to be talking about backtesting your strategy on MT4 and MT5. So if you have any questions throughout the webinar, feel free to let me know in the chat and I will answer them as soon as I can. And we should be able to get through the slides pretty quickly. So we might have time at the end for some setups or looking at some live analysis. So feel free to let me know in the chat if there are any specific currencies or commodities that you'd like me to go through. And yeah, once I'm done with the slides, I'll be sure to go through those. Okay, so as per usual, before we get started, just a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, let's get started. So I'm Melanie. I'm from the company Everest Fortune Group, who are finalists for Best FX Research and Best Equity Research in the years 2019, 2020, and 2021. Okay, without further ado, here's our agenda for today. So we're just going to do a really brief introduction to MT4 and MT5 in case you are not familiar with them. And then we're going to do a comparison and then some tips for trading on MT4 and 5. And we're going to deep dive into backtesting. Okay, so MT4, short for MetaTrader 4, is a widely used trading platform that is highly recommended for beginner traders. So here we have a screenshot of just the layout of MT4. So we have all of the charts laid out nicely, and you can minimize them as and when you wish. There are a few differences between this and MT5. I'll show you in a little bit. Let's get into some characteristics of MT4 first. So just a brief intro to MT4. Firstly, the access to multiple markets. MT4 provides access to various financial markets, including forex, currencies, stocks, commodities, and indices. This allows you to trade different instruments within a single platform. Number 2, MT4 is really easy to install on your computer or mobile device, and most brokers offer MT4 as their primary trading platform and provide step-by-step instructions to set it up. Once installed, you can quickly create a trading account and begin trading. So MT4 also features an intuitive and user-friendly interface. The platform offers customizable charts, real-time codes, and a variety of technical indicators and drawing tools to help you analyze the markets effectively. Next, MT4 also provides a wide range of analytical tools. So these include built-in technical indicators, such as your moving averages, your MACD, RSI, so on and so forth, charting capabilities, and the ability to create custom indicators. So these tools can help you in identifying trends, patterns, and potential entry and exit points. So one of the key features of MT4 is the ability to use EAs. So EAs are automated trading systems that can execute trades on your behalf based on predefined trading strategies. So MT4 allows you to develop your own EAs or use the existing ones from the community. Next, backtesting. So MT4 also enables you to backtest and optimize your trading strategies using historical data. So you can test your strategies against past market conditions to evaluate their performance and make the necessary adjustments. Mobile trading. So both MT4 and MT5 offer mobile version for both iOS and Android. So you can monitor the markets and manage your trades on the go. And lastly, community and support. So MT4 has a large and active trading community. So on there, you can find online forums, tutorials, and educational resources dedicated to MT4. And you can learn from experienced traders and share your own knowledge as well. Additionally, most brokers offer customer support to assist you with any platform-related queries. Okay, next, let's take a look at MT5. So for MT5, here is the interface for MT5. You can see it's pretty similar, but there are just a couple of differences that we'll mention in a bit. So here are the characteristics of MT5. You can see there are a couple of similarities, but MT5 offers even more, or rather a wider diversity of financial markets. So this actually includes cryptocurrencies, which MT4 does not offer. So this allows you to diversify your trading portfolio and explore different market opportunities all within a single platform. Of course, they also offer stocks as well, forex currencies, commodities, futures as well. So next we have the user-friendly interface. We mentioned this earlier, so I'm just going to skim past it. And next we have the enhanced timeframes. So MT5 expands on the timeframes available in MT4. It offers 24 different timeframes for chart analysis. So this allows you to analyze price movements in greater detail and find trading opportunities that suit your preferred time horizon. Next, netting and hedging systems. So MT5 offers both these systems, providing flexibility in trade management. So if you're asking what exactly are these, so firstly, the netting system allows you to have only one open position per trading instrument. The hedging system enables you to open multiple positions, including opposite directions, for the same trading instrument. Okay, MT5 includes a depth of market feature, also known as level 2 data. So it provides you with information about the current bid and ask prices, as well as the available liquidity at different price levels. So this feature allows for better understanding of market depth and can assist in making more informed trading decisions. Economic calendar. So MT5 also incorporates an integrated economic calendar, providing you with important economic events, news releases, and their potential impact on the financial markets. So this feature helps you stay informed about key market-moving events and adapt your trading strategies accordingly. Number 7. So MT5 offers advanced backtesting and optimization capabilities, allowing you to test and fine-tune your trading strategies using historical data. So similar to MT4, you can assess the performance of your strategies under various market conditions and optimize them to improve their effectiveness. So I mentioned earlier that both MT4 and MT5 are available as a mobile version as well. Okay, lastly, community and support. This is pretty self-explanatory, so I'm gonna skip that as well. So MT5 offers more advanced features, so it's important for beginners to educate themselves about trading concepts, risk management, and develop a trading plan. And it's more for a MT5 is more for a comprehensive trading experience since it has all of the features required all in one app. Okay. I've briefly touched on some of these, so I'm just gonna skim through these as well. So there are a couple of similarities that I mentioned earlier and a couple of key differences that we want to point out. So firstly is the programming language. So MT4 uses MQL4, which is MetaCode's language 4, whereas MT5 uses MQL5. Now, MQL5 is an enhanced and more versatile programming language compared to MQL4. So this offers more advanced features and capabilities for developing custom indicators, EAs, and scripts, if that is something that you are looking at. Next, we have market coverage. So we mentioned this earlier, but MT4 primarily focuses on Forex trading, whereas MT5 offers a wider range of instruments, including stocks, futures, options, and crypto. So MT5 provides traders with access to multiple financial markets within a single platform, whereas MT4 is a little bit more limited in its market coverage. Okay, next we have timeframes. So we mentioned this earlier as well, but MT4 only offers 9 standard timeframes, which could be enough for you depending on your trading strategy. But if you prefer looking at a wider number of timeframes, then you could look at MT5 since it expands this to 21 timeframes, providing more flexibility and granularity for traders. Hedging. So MT4 supports hedging, which means that traders can hold multiple positions of the same symbol in opposite directions. So it allows you to open both long and short positions simultaneously for the same currency. Whereas MT5, it eliminates hedging and adopts a netting system, where only one position per symbol is allowed, and each subsequent trade closes or modifies the existing position. Next, we have depth of market. So MT5 includes the DOM feature, also known as level 2 data. So it provides traders with information about the current bid and ask prices, as well as liquidity that's available at the different price levels. However, this feature is not available in MT4. As for our economic calendar, this feature is not present in MT4, but it is present in MT5 because it incorporates an integrated economic calendar. So it also tells you how prices will be affected based on the different news releases or economic events. However, even though MT4 doesn't include this, but there are many websites that you could use to strengthen your fundamental analysis as well. So one that we are really fond of using is the forexfactory.com, because you can adjust the weeks that you're looking at, weeks or days that you're looking at, and it will tell you all of the important events. It will even indicate the significance of these events as well. So not too much of a problem if you don't have the economic calendar integrated into MT4. It's just more for ease and convenience. Okay, next is backtesting and optimization. So MT5 offers improved backtesting and optimization capabilities compared to MT4. So it allows traders to perform more accurate and detailed historical testing of trading strategies and optimize them based on various parameters. Lastly is the user interface. MT5 has a more modern and user-friendly interface compared to MT4. It provides enhanced charting tools, more customization options, and a more intuitive overall experience. So while it's important to note that these are the differences, but both platforms are widely used and supported by different brokers and offer a wide range of features and tools for traders. So the choice between MT4 and MT5, it really ultimately depends on your specific requirements or trading style, as well as the markets that you wish to trade in. Okay, this is just a summary of everything that I've mentioned earlier. Yeah, I've mentioned everything, I think. Let me just see if there's anything else. So MT5, because it uses a different programming, it's also slightly faster, 64 bits, and it's multi-threaded as well, compared to MT4. But if that's not an issue for you, then MT4 is good enough. Okay, yeah, let's move on. Tradable instruments. So these are the tradable instruments that are available on MT4 and MT5. Okay, but this list is not exactly completely accurate because it really depends on the broker that you are opening a trading account with. Okay, the only exception is that you can trade crypto on MT5 only. Okay, timeframes, we mentioned this earlier, but how exactly you can determine whether 9 timeframes or 21 timeframes, which is better for your trading strategy. 9 timeframes should be enough for swing and long-term traders, whereas 21 timeframes just gives traders an advantage for deeper analysis of your favorite assets. Okay, so technical indicators, MT4 offers 30 built-in technical indicators and 2,000 custom indicators from the free code base, whereas MT5 provides 38 built-in technical indicators to get insight into market direction. So in addition to the free indicators, MT4 also offers over 700 paid ones in the market. So it's definitely enough for market analysis. Okay, for charting tools, MT4 and MT5. MT4 has 31 graphical objects, such as lines, channels, the gun, and Fibonacci tools, shapes, and arrows to predict future price movements. MT5, on the other hand, offers us 44 graphical objects, including geometric shapes, channels, gun, Fibonacci, and Elliott tools. Okay, in terms of the types of orders as well, MT4 offers 4 types: buy stop, buy limit, sell stop, and sell limit. MT5 offers 6 types of pending orders. Those offered by MT4, as well as the buy stop limit and the sell stop limit. So we mentioned this earlier as well. So MT4 tends to be recommended for beginners because it's easier and simpler to use compared to MT5. So MT4 is the best platform to trade Forex because it was initially designed for the needs of Forex traders. However, the cons is that MT4 has fewer trading options than MT5 and is a little bit slower. So some pros and cons for MT5. It allows more markets for you to trade, has more charting tools as well, and more time frames. But it can appear to be more complex for beginners, and few robot and EA developers opt for MT5. So if you're wondering which is better, both platforms MT4 and MT5 are popular amongst traders. So in short, if you're new to trading, MT4 is the right choice. The basic functions in MT4 are more than enough for trading. If you already have experience, then you can try MT5 since it has more features. Okay, so top 6 tips for MT4 and MT5. Tip number 1 is to use the MetaTrader Market Scanner. So this is a powerful tool that can help you find trading opportunities because it allows you to scan for specific conditions, such as price movements, technical indicators, and economic events. So you can then use this information to make informed trading decisions. Number 2, create custom indicators. So custom indicators are a great way to tailor your trading experience to your specific needs. You can create indicators that track data points that are important to you, such as support and resistance levels or moving averages. So this can help you make better trading decisions and improve your overall performance. Number 3, use EAs. So EAs are automated trading platforms or programs that can help you to execute the trades. So we mentioned this earlier, but it basically helps you to place your orders, manage your positions, and close your trades automatically. So EAs can take a lot of guesswork out of trading and can be a valuable tool. Number 4, manage your risk. So risk management is a really important part of successful trading. You need to know how much risk you're willing to take on, and you need to set stop losses accordingly. So this will help you to protect your capital and avoid making costly mistakes. Okay, stay disciplined. So discipline is essential for any trader who wants to be successful. You need to have a plan and stick to it. Emotions can cloud your judgment, so it's important to remain calm and focused when trading. Tip number 6, have realistic expectations. So it's important to have realistic expectations because you're not going to make a fortune overnight and you need to be prepared for any losses. So if you keep your expectations in check and focus on long-term success, you'll be more likely to achieve your goals. Okay, so let's get into backtesting. Okay, so what exactly is backtesting? So it's basically the use of historical data to test your strategy. Sorry about this, my throat is acting up because the weather is getting really cold. So backtesting is a crucial process in trading that involves assessing the performance of a trading strategy using historical market data. So it's just a way to evaluate how a particular trading strategy would have performed if it had been applied to past market conditions. So of course, it uses historical data, knows the behavior of your strategy, fix your strategy, and helps you to improve your strategy. So how exactly the process of backtesting is? Let's see if I have the slides here. Okay, these are some things to just watch out for: net profit or loss, volatility measures, averages, exposure, ratios, and annualized return. But the process is typically you start off by formulating a trading strategy that includes specific entry and exit rules. So this strategy can be based on technical indicators, fundamental analysis, quantitative models, or combination of factors that we've mentioned on this slide. Next comes the data selection. So historical market data, such as price and volume data, is collected for the period over which the backtest will be conducted. So the data should cover a representative sample of market conditions, including different market cycles and volatility levels. Next, you then execute your trade. So the trading strategies rules are then applied to the historical data that we mentioned earlier, and then you simulate the execution of trades based on the strategy's signals. So this involves identifying potential trade, entry, and exit points according to the specified rules. Next is then comes in your measurement for the performance of your strategy. So the simulated trades are then tracked. Key performance metrics are calculated, such as profit or loss, win rate, average trade duration, and risk-adjusted returns. So these metrics help to assess the effectiveness and viability of the trading strategy. And then lastly would then be your analysis and optimization. So then traders analyze the results of the backtest to gain insights into the strategy's strengths, weaknesses, and areas for improvement. So they may adjust parameters, modify rules, or explore alternative strategies to enhance performance. Okay, that's just in case you were wondering how exactly you go about backtesting. So here's one of the strategies, tick-by-tick backtesting. So for tick-by-tick backtesting, you would require in-depth data, volume weighted into price, creation of elaborate models, prevent unexpected surprises, and you would need to simulate your trade execution, which is pretty similar to what I've recently mentioned. Okay, common backtesting mistakes. So firstly, you could get an unrealistic backtest result, and that's how you would know. You would either have to repeat your testing, or change a variable, which you would have to analyze. Next, do not overmine your data, because there are a lot of factors that come into play when you are trading. A lot of market conditions that are beyond your control. Next, getting the timing right. As I mentioned earlier, volatility is a big thing that could affect your results. So it's important to get the timing right for your execution of your trades. And lastly, incorrect assumptions. So based off of the results of your backtesting of your trading strategy, then you have a certain number of assumptions that you make off of those results, and not based off of whether you think that it's right or wrong. Okay, Okay, that brings us to the end of my slides, but let's go ahead and get started with some charts. So if you have any requests for any charts, feel free to let me know in the chat. One practical trick for backtesting. So most of the backtests are conducted on, excuse me, on any of the majors, typically, especially if you are trading Forex. So be something pretty basic like any of the majors. If you're trading commodities, then perhaps gold. Those are the common ones that are used for backtesting. If you're asking me to show you how to conduct a backtest, I can't do that now because that requires a software or programming language that's specifically designed for backtesting. So I can't exactly run the backtest for you guys to see currently, but if that's something that you are interested in, feel free to let us know and we could do a webinar on that soon. So maybe let's go ahead and analyze one of the majors together first. Okay, let's go ahead and analyze the euro dollar together. Okay, so as per usual, we want to look at the higher time frames first and then do a top-down approach. So we're going to take a look at our higher time frames first, just to get the general direction. So here we can see price moving upwards. That's our general direction on the weekly time frame. And if we take a look at our daily time frame, our general direction is upward as well. Let's see if we have a parallel channel. Okay, no. But we do all agree that prices look like they are heading upwards. I think we have a trend line here. Okay. Okay. Now we typically will do our analysis on either the 4 or 1 hour time frames. So let's go ahead and take a look at that. Okay. So first things first, we want to see if we can identify any trend lines or trend channels. Okay, it doesn't look like there are any trend lines here. Okay, but it does look like price is moving within this ascending trend channel. So for a valid trend channel, just to recap, you want to make sure that there are 2 touches on top and at least 2 touches below. Okay. So now that I've done that, let's go in with our support and resistance levels. So over here would be my first resistance. And you see, I want to pull it back as far as I can without cutting too many candlesticks, just so that I can see how significant this level is. So I've placed it here. I can see that price has tested this level many times in the past. Okay, and then this is my first support. So this is just purely based off of graphical analysis. So purely just swing highs and swing lows that are closest to where current price is. Then we'll go in later with our Fibonacci levels to adjust the levels accordingly if we need to. Okay, and then here is my second resistance. Okay, now that we've done that, let's go in with our Fibonacci levels. So I'm looking for a Fibonacci retracement. So for Fibonacci retracement, we want to look for, we look at 5 specific levels. We look at 23.6, 38.2, 50%, these 5 levels, 61.8 and 78.6. But I can see that my 38.2 lines up nicely with my second support. So I'm just going to go ahead and keep that. Okay, and then I'm going to see if I have another retracement over here. So same thing, I'm going to look at these 5 levels. And I can see 78.6 lines up with my second resistance. Now, even though the 61.8 lines up nicely with my first support, but because price has already broken this level, so we can no longer use it. Okay, whereas in this case, the 78.6 price has yet to retrace back to the second resistance at the 78.6 level. Okay, so now I'm going to look for a retracement. So for retracement, not retracement, sorry, projection. So for projection, we use these 3 levels, 61.8, 78.6, and 100%. And you want to remember when you're looking for a projection, that you want to look for this flash kind of shape, like a Harry Potter lightning bolt kind of shape. Okay, and in this case, I can see my 100% matches nicely with the second support and the 38.2. Okay. Okay, now that we have all of our Fibonacci levels, we can go ahead and include some indicators to support our analysis. So we typically like to use Ichimoku and MACD, and I can see price is moving above the Ichimoku cloud, giving us a bullish bias. MACD, however, is giving us a bearish signal. So I'm going to pull out RSI. Okay, and RSI is giving us this, or rather it's moving in this ascending trend line as well. Yeah. Okay, so I'm going to get rid of the MACD. So we can expect prices to bounce off of this level and head towards our first resistance. But since we can't find any Fibonacci levels to support this level, it's considered a pretty weak level. So we could see it break as well. But I do want to mention that even though we cannot find any Fibonacci levels, this level in itself has 1, 2, 3, 4 currently touches on its all on its own. So this is what we call a overlap support level. So it's a pretty strong level, and we could see price continue to bounce off of the level and continue within this ascending trend channel. Okay, and that's all for Euro USD. I think we have time for one more chart, so feel free to let me know if you have any requests. If not, maybe we'll just go ahead and do the XY, just a commodity instead of, since we've already done a Forex currency. Okay, so same thing, we're going to do a top-down approach. Can see on our DXY prices, this is kind of a downward movement. Okay, on our daily time frame, it's also looking like the general direction is downward, although there is a slight reversal here, but the general direction is still downwards as well. Okay, let's begin our analysis on the 4-hour time frame. Okay, I have this descending trend line, but I want to see if we have a descending trend channel. Okay, we do. So we typically will try and look for channels instead of lines, because trend lines, or rather for trend channels, it's a lot easier to see if there will be a continuation or if there will be a breakout of the trend channel. Okay. So now let's go ahead with our support and resistance levels. Okay, here's my first resistance. So for your first resistance, it's typically the closest swing high to where price currently is at. Conversely, for your support, it will be the closest swing low to where price is at. Okay, and then for the second resistance and support, that really depends on either the graphical analysis or on your Fibonacci levels. Okay, I'm gonna leave the second resistance out first. Here's my second support. Okay. So let's get started with our Fibonacci levels. So same thing, now I'm looking for a retracement. So earlier I mentioned that I will leave my second resistance for later. So this is the reason why. I'm just going to use my Fibonacci to help me. And the reason for that is because for this specific graph, we have a lot of swing highs and swing lows. Okay, here. Okay, so we have a 78.6% that lines up with my second resistance. And my second resistance is significant on its own as well because it is an overlap resistance. Okay, and I can tell my 50% Fibonacci retracement is nicely in line with my first resistance. Okay, now I think I have another retracement here. Okay, yes, my 38.2 lies nicely with my first resistance and the 50%. So this is a major confluence area for us to take note of. Okay. So now let's pull out some indicators once again. Ichimoku, MACD. So prices are moving below the Ichimoku cloud on our Ichimoku indicator, giving us a bearish signal. On our MACD, it's giving us a bullish signal. So same thing, I'm going to pull out RSI. Okay, RSI isn't really telling us much. So I'm going to pull up stochastic. Okay. So for our stochastic, you can see price has made a lower high on our price chart, whereas on our stochastic, price has made a higher high. So this actually suggests that there could be upward pressure pushing price upwards. Okay, but we would have to be careful because of this major confluence area with the 38.2 and the 50%. And this first resistance is also a double swing high. Okay. It's actually an overlap as well. So because of all of these factors, it's a confluence area. So we could see price reversing off of it, or we could see price pushing forward, that's suggested on our stochastic, pushing up to our second resistance, and maybe not up to our second resistance actually. Let me just because price is moving in this descending trend channel, we could see price break out of the first resistance, but still rebound off of the descending trend channel, because there is still a lot of downward pressure, since on our weekly and our daily timeframes, it gave us a general downward movement. Okay, so we have to be careful with this one. And yeah, I think that's all the time we have for today. But we still have a few minutes. So before I end, feel free to let me know in the chat if you have any other questions. Yeah, if not, you can feel free to leave the room. Thank you guys so much for joining today. Hope you guys have a great rest of your week, and I'll see you guys next week. Bye.